The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the weekend webinar. It's not a webinar, it's a podcast. I messed up there on the first sort of sentence. But, joining me is Colin, Barry and Dick. Sorry, I messed up again there, sorry. Joining me is Peter and Steve. Paddy's supposed to be joining. Paddy's on a works call, guys, at 5:45 on a Friday afternoon. Pete, you're the one that tends to be working late on a Friday, or up to the end of the clock. So I don't know what Paddy's doing, but...
It's probably transatlantic, probably.
Yeah, I'm 35,000 feet up, guys. Yeah, it's hard to download. I love that little, that subtle the way he says that. What's he said for a podcast? Yeah, but it's hard to download that at 35,000 feet, you know what I'm saying?
Yeah. Oh, did I mention? Yeah. I'm on the red eye back from LA.
Yeah, I'm just heading over to the States, guys, pond side. Do you know what the controversy this week was, boys? I thought the big controversy was it, if you think about some of the things, the events that happened this week, right? Boris now caught with champagne, drinking more champagne. Oh, did they actually get any work done in that place? He was caught again having another party. So I thought that was quite controversial. But no, we've seen that before. Starmer getting lynched was quite controversial. And then I thought, the most controversial thing I saw, really, the most outrage amongst British people, was the American spelling in Wordle. People were outraged about that, weren't they? Bloody hell! What's going on? Because
what was the word?
It was humour. But of course, they don't use a U, do they? Which makes a bit of sense, really. But because I started doing it, I thought, hang on a second, I realised the word I wanted to fit in there didn't really fit. I thought it could only be that. And I realised, this is American. Surely they would have thought of that, though. The British people didn't like that, And, but I love the way a lot of people just went mad about that on Twitter and stuff. It was a real world issue there. But I beat you today, Pete, didn't I, in the Wordle?
It looks like that. Yeah, you got it in 4 today. I struggled today. I got it in 6.
Well, in 6 you can't really. There's no other words, is there? No other letters, really.
You run out by then, haven't you?
Yeah. It was hard though. Ulcer was the thing. Do you know what? Go on.
The key is what you get for. Like I got the ER first, but that doesn't really help because there's.
I got that.
No, but then if you get the L, the second one, there's only limited, other words, so that it helps. So if you get U, the first, that helps. So that's the thing.
I don't think the word ulcer would ever pop into my mind thinking of words, to be honest.
It may pop into your cheek, in your mouth.
Yeah.
Do you know what though? Do you know how I got it before you, Pete?
You looked it up on Twitter?
No, I did it with my kids on my mobile first, right? And I got to row 5. I thought, I don't know what that is. Oh, yeah. And then I went on my laptop. Obviously, a different thing. I got it in 3 goes. Yay!
Okay. Well, it still took you another 3 goes.
I know. What is it? I can't understand. And then, did you know, just before I came on now, recording this now, Monty and Fred, my sons, are going to the in-laws because I'm going to Cardiff to watch Wales, Scotland. Monty just called me and said, Dad, what's the Wordle word today? I said, what? What's the Wordle word? I said, ulcer. Can you text it to me? Yeah. So all kids will do now is just insert that in the first row.
Yeah.
And you think you've done it. The kids don't care about cheating. It's like...
well, your kids, yeah.
yeah. No, I felt a little bit bad about doing it on 2 different...
Well, no, you tell him the wrong word, so it makes him... He doesn't get it then.
Nice.
But, but that'll learn him. But no, kids are like that, though. They don't care if they cheat and they win. If you play games with them, honestly, small games... And if they cheat and win, they don't mind. They just still see it as winning. They don't have that, that inbuilt sort of...
You're kind of like that, though, aren't you?
No, I'm ethical to a certain extent. But kids don't see that. They don't care. It's like, even, do you know what's odd is when they do sports races in school and stuff, and they get a sticker for coming somewhere, they think they've won.
Well, that's just, that's poor. A medal for turning up, because
I remember saying to Fred, you come 3rd day. No, he didn't. He got a medal for it. And have you seen that rap thing on, I think it's on, I don't know if it's on Instagram or TikTok or something, the guys talk about millennials, and they think they're all overconfident and entitled because of that. They think everyone gets a reward, And so they start up their life, they're in a coffee shop, jobless pretty much. They think they're going to be a billionaire by the time they're 30. Because, I quite like that. In life, you do lose at things. That's the whole thing. You've got to lose, haven't you, really?
Yeah.
To teach you a lesson. You think, that's quite hard, actually. Now, you've got a choice. Either you quit and you don't get any better, or you work hard at it and get better. It's the same with investing. Same with investing, boys.
Oh, nice. Segue.
See? Yeah, but it's true, isn't it, right? Oh, by the way, we got a question asked by Steve. It's a very good question, actually. I don't know if you've seen it, Pete. I think you have, because you texted.
Oh, yeah. That's it, yeah.
But, no, so basically, right, I talk about investing a lot in the club. People are struggling because it's been the hardest, I say, it's almost 12 months now. Probably 8-9 months, actually, in the microcap space. And but the thing is, that's the way it is. It's not always going to be easy, The good times come the bad. But anyway, let's go with Steve, because I talked about this bit in this question. Pete stroke Steve, ask your question, please. Ask your question.
Go on, Steve.
Go on, Pete.
Right, go on. So my question was, the economy seems to be rebounding based on the data released this week. And yet Friday we see a sell-off. We see the markets drop. Why?
Yes. Well, what is the data? What's the data that's showing good stuff? What is it? You have any idea?
What is the data? I'll get it up. Hold on.
Oh, keep it clean, Pete. Come on.
Oh, sorry.
So was it GDP? GDP for the last 12 months?
GDP for the last 12 months. That's what.
Yeah, by 7.5%. December was a bit of a weak month, though. December, because of the government restrictions. But yeah,
despite that, it's still positive.
Well, as you know, if you heard the phrase, the old when America sneezes, the rest of the world catches the cold, markets-wise. Yeah. So I don't know if you saw that. Oddly, growth by 7.5% in the UK. Mm-hmm. Inflation in America, 7.5%. So essentially, there's no growth. I mean, if you put them together, obviously different economies. But if our inflation is 7.5% for the last year, and we've grown by 7.5%, that's nothing. So we haven't done anything. But no, but the reason why it's sold off is America, essentially, because they've been a bit slow on raising the interest rates. The Fed, the head of the Fed, Jerome Powell. Hey, I'm the head of the Fed. My name's Jerome. But he's literally been printing money like crazy. There's a good meme, actually, on Twitter with it shows a picture of him just rolling something and dollars spinning out of this thing. Printing money! But yeah, so that's been happening. And the worry is, inflation-wise, or more accurately, it's not inflation, it's the interest rate hike to rein in inflation, And,
so it's fear of that happening.
Yeah, because sometimes there's a good news, bad news, or bad news, good news, So what happens is with the Fed, for example, if there's very good economic data and they're not raising rates, they're still low. At least over here they've risen by 0.25% so far. Over there haven't done it, and they've ploughed billions and billions, or trillions actually, into the economy, buying bonds and such. So it's inflated asset prices. So they've ploughed loads in, and they're starting to worry now. If they get every time they get good employment data, for example, the market sells off because they realise the Fed's going to have to rein in the growth because there's too much inflation, and that means raising interest rates. And interest rates, of course, is not good for growth. It'll slow things down. But do you know what? As an investor, though, right, you should not worry too much about the market sell-offs like this. Don't worry about it. If you hold, like I say, all you can do is look at the individual companies you have. If they are growing, by that, I mean, with us, we look at microcaps. So, I mean, top-line growth. If they're improving, that means their margins are the same, but they're growing or improving, for example, and decent valuations. It's fine. You'll get a better return on that over the long term than you will holding cash. So, and I said, I tweeted out earlier on, if you sell an improving business just because the share price has gone down, your emotions are in control. You're worried about the share price going down, so you sell. If you buy an improving business because the share price goes down, your brain is in control. You are thinking about it. You are researching the company because, of course, if the share price goes down, the valuation of the company goes down. If that company is turning over the same amount or more over the next few years, then it becomes a better opportunity, isn't it? It's a more investable proposition. So the best way to lose money anywhere in the market is to sell a good business at a low because the share price has gone down. Volatility is normal, ladies and gentlemen. I mean, if you think about it now, how long have we been investing?
Oh, about 1 million years or something. How long was it?
For me?
About 5 or 6 years,
yeah. You're a bit longer than me, Pete.
Well, probably 10 or 12 years for me, but I haven't really got, only within the last 5 or 6 years I've kind of got into it like this.
Yeah. So you look at it, right? So I've been investing now for 20 years pretty much, on and off, It's like dot-com crash. And so I've had the dot-com crash, the great financial crash, the pandemic crash, and I experienced 3 big stock market crashes. Each one supposedly from the doomsayers being the big scary one, like no other, where stocks will implode and never return again. Let's be honest, we've gone through world wars. Stock market has always been this, always bounced back. It's always gone higher, you know? So it's the worry. The people just worry about it. They sell at the low. That's the worst thing to do. I mean, the hardest thing to do is do nothing, absolutely nothing, because the markets are volatile. And the thing is, if you're watching the markets too much and look at the macro too much, you get worried out of the stock. A good business, just get worried out of it. I mean, when you think about it, and I keep saying this, if it's a non-listed business you're invested in, you've got your money in a non-listed business, like Steve, for example, you've got your own business there, right? Would you chuck in the towel in your business because the interest rates may go up next week?
Yeah.
Good. That's it.
No, I wouldn't know.
Exactly. Or, there's a bit of inflation going on. I mean, the trouble is, when a company is listed, people see real sentiment and fear that affect share prices, and they start selling off. I mean,
but the frustration of this week was the sell-off on Friday, coincided with the positive news about the economy rebounding.
Yeah.
But I get the bigger picture and the looking forward, and that's why it's selling off, and we're on a downward trend now. But you get some good news like that. You'd like to think it reassures people that, Yeah, it
is though, isn't it? I mean, we are bouncing back, faster than before. But there's a worry about inflation. I say interest rates that may choke off growth. But but do you know what? When you talk about, I sort of tweeted out on Twitter there. In fact, remind me. There's a Twitter poll I need to look at, and I say, have you changed your investing style over the last 6 months? And some people have, some people haven't, and all that stuff. But I repeat, the way to make money in the stock market is to hold good, improving businesses. For a while when they're really firing on all four cylinders. In short, just do nothing. If you're in good stocks, the value decently, they're growing, they're in good areas, and it's a lot harder to do nothing than just saying it. It really is hard because it's so tempting to get caught up in the fear of it all. But volatility is there. It happens. It happens all the time. I mean, it's been worse recently, but you know what? That probably means it's going to get better, the markets. I don't know how long it'll take, but it will get better. It's been seen before. When you have long periods of downturns, you tend to have good periods of upturns. Why? Because all these businesses that are getting better, their valuations are getting better. They're being more attractive as assets, as investments. So, if you don't need the money urgently right now, why would people sell? Apart from getting scared. I don't understand why.
Exactly. Why?
I mean, the company you're invested in is not going to go bust. Don't keep looking at your portfolio value because that will scare you. You haven't lost any money until you sell. And why accept a bad price? You've got to play hardball with the market. That's it. The market will offer you stupid prices sometimes, but you can't just get scared out of it and say, oh, go on then. Yeah, I'll sell it. Even though I bought it at 10 pence, I'm going to sell it 5 pence. Yeah. Why? Why do that?
I know. No.
It's funny, when I first started, I used to panic when you'd see £100 loss or something, quite regularly now you'll see a couple of £1,000 out of my portfolio disappear, and I'm like, oh well. You think, oh God.
That's Harry and Larry, that is.
Yeah.
A couple of grand disappear. Steve won't notice that. The share price has gone down when you take them out.
Steve, that's at the weekend as well, so that's a bit weird.
Saturday afternoon trading.
And then you look on, Harry and Larry's Instagram. They have big parties on the boat. Hey, all right. Ooh. Thanks, Steve.
Sure, Steve.
The thing is, it comes to this. It's a bit like haggling. The people who get the good price win. And that means when you buy in and when you sell as well. You've got to buy a good company at a cheap valuation or decent valuation, then sell at a very good valuation when it's firing on all four cylinders. Like companies I'm investing in right now, I suppose the first one is going to be Escape and is profitable, right? What's the next one? Probably maybe Gfinity is going to be profitable next. So why are we selling them? If anyone's selling them right now, why are people selling these, dumping the entire holding of the companies when they're nowhere near what they're going to achieve? They've only just started. They just started. You've got to give them a few years from even being profitable, and then that's when they start really motoring. So, but I was just thinking, do you know what I'm confused with inflation, right? I don't understand this. If you think about it, inflation, they say, and this is very appropriate, they say the cure for the high oil price is a high oil price. Do you know what that means?
No.
Steve?
It needs to go high to go higher.
What's that game on with the catchphrase? Is it? Yeah. Oh, it's close, Steve. It's not quite there, actually.
Say what you see.
Yeah, say what you see. No, but basically, if oil goes up, right, then it gets too expensive. People start using less of it. So what happens is less demand, it goes down. And so the cure for high oil prices, because in the end, people start using less of it because they think, petrol's and if you think about it, the cure for high inflation is high inflation. But inflation is better than deflation, because if you look at the basics, the difference between growth and reduction, inflation, deflation. So if you look at it, what's the main contributor at the moment to high prices?
Energy.
Yes. Not just us moving around and stuff.
Oh, okay.
But so everything uses energy, doesn't it? All businesses, all people. So if this price increases, this reduces companies' margins, right? So in an inflationary environment, so they increase their margins by putting their prices up, and people also like to pay for energy, put in their homes, put fuel in their cars. So they'll have to make a decision, right, on what not to buy. But essentially, people will be more careful, won't they? If prices are going up, they'll be a bit more discretionary. But as long as they're still employed, and everything's growing, the economy's growing, it's fine. They can choose what they want to buy more carefully. So this leads to less purchases of certain goods. This leads to less being produced of those goods. This means less energy is needed, and so the price of energy will start to go down. So it solves itself, doesn't it?
Yeah. Yeah.
And then people ask for wage increases to keep up with rising costs. Some people get them. And then as inflation turns to a new normal, their cost of living, isn't as bad because they've had a wage increase. Inflation's come down a little bit, and so the cost of living isn't impacted as much, which keeps demand sort of consistent and the growth in existence. I just think about it. If you look at the stocks we're invested in, right? And everyone talk about prices going up, 7.5% in America. It's close to that here. Let's say we do 10% inflation here across that basket of goods that we talk about, for inflation. Would that 10% increase across the basket of goods, probably more than that, but would it radically change your shopping behaviour?
No.
No, I mean, so we all worry about it. People say, I just noticed pasta's gone up by like 30 pence. Yeah, but you still buy it, don't you? It's like, you don't stop buying it. So until it gets to the stage where you can't afford it, then it's not going to change your outlook a lot. So everyone gets worried about it, And this is why...
No, but a certain level of society would feel that pinch more, wouldn't they?
Yes, but it's not the majority of people, is it? I don't think.
Probably not.
I'm not going to say, we can't go out for a meal now this month or whatever. Nice treat ourselves to a meal or cinema because prices are going up by 10%.
But some people will. I mean, I don't know about the majority, not the majority, but a large chunk of people will have to start tightening their belt a bit.
Oh yeah, but what kind of things do you cut back on? I'm already thinking about, we got our the electricity bill and stuff. You do start thinking psychologically, what can I cut back on? First thing I'm going to cut is Amazon Prime. I don't really use that. I don't care for things. In fact, it encourages to buy stuff, Amazon Prime. In fact, it's been a massive knock for Amazon because I not only cut their subscription service, I don't know what it is, £7-8 a month or something, or what is it? I don't know what it is. Yeah. But I'll order less as well because I get less. The postage and packaging goes up. So things like that. But I won't. For example, if you look at where we're invested, right? Would you stop? For example, going for Chief to go on a website, stuff like that. Would you stop maybe having the odd treat to an escape room or boom battle bar? That I don't think that would be affected. In previous times where inflation's happened, those kind of things don't get affected. People are always going to treat themselves. People are pretty much always go on holidays in high inflation times. But you do start a penny pinch about stuff you don't really, it's on a regular basis you have. They think, what actually don't we use? Don't they? So I don't think that the leisure hospitality will get affected, any of that kind of stuff. Because, but what's worse is interest rates. So central banks mess around, right? Because they've got to put a little break on the inflation. But if they mess around too much and raise interest rates, that's bad because that stifles growth because that rises the cost of debt. So all companies sort of get affected. Any companies with debt, people then have problems buying new houses because the mortgages go up. So that stifles that. And then you get there. So this is the worst form of inflation, really, because, of course, your cost of living goes up because you can't, everything, if you've got loans, anything goes up. Everything goes up. So in this scenario, companies will stop growing. They'll produce less because they cost more. They'll probably lay people off. Those people then will make radical buying decisions, won't they? They won't just say, I won't just go out once a week or once, twice a week. They'll stop going out completely because they can't afford it. They get on a job. So you mustn't stop growth. Growth must keep happening. So, and also central banks are so in debt. massively in debt. So they can't afford to to just hike up interest rates. So it's all this sell-off is ridiculous. I just think it's just calm down, everyone. Inflation is not bad. I mean, we do have a target of 2%. Okay, it's above that, but it's going to happen. It's got them down like this. And people, recession, big deal. Just again, the hardest thing to do is hold on to good businesses.
Yeah, I do find it funny though, and we said this a lot, and I said it earlier, but small caps being sold off when in reaction to macro news, and I find that bizarre because it's not like, well, why would you sell that now?
Yeah,
I mean, so to me, it's disconnected to that. I mean, it's connected, it's all connected in a way, but I think it's a very weird thing to do. But whether that's just short term trading and whatever, and people.
Yeah, it's fear, sentiment, fear, absolutely.
Yeah, and then buying at a lower price. But I don't get that kind of mentality. Yeah, but I suppose it's just part and parcel of investing, isn't it?
Yeah. Well, do you know, I put this poll out here, right? It's funny the kind of responses. I read that book on psychology investing. I had the guy on the podcast once, and he was saying, whatever gives you the first big loss you have can shape your trading or investing future, but be careful because it may mess you up. And so if you take a big loss on a company that's a bit of a hope hype potential stock, and you think this was the one, and you put a load of money into it, and you go overexposed on it and go nuts on it, and you lose a lot of money, then from then on you probably become a trader. You start top slicing here and there, putting stop losses in, and you never actually give yourself the chance to get big profits because you're scared it'll come back down.
I never did.
What did you do?
Well, I made a big loss pretty much as soon as I went in. I went all in and pretty much lost all of that.
You're a special being, Steve.
Cool.
You shouldn't have. You shouldn't. That's why I shouldn't have bias of that. So some people said, I'm definitely going to have a stop loss on all my shares now. When you think your share price is going low, it often does. That to me, that's trading. It's not investing. Now, like I said, if you are in a good company and you've done lots of research on a company, and you can see the fundamental metrics, the financial reports are getting better, the growth is there, share prices go down, it makes a more investable proposition. It's a better business, it's better valued, it's cheaper. Why would you put a stop loss on that and actually crystallise a loss? It doesn't make any sense, So, in fact, one guy said the company he would have sold this week because it dipped, but he didn't. He knows it's an improving business, and we're going to learn here. So someone said, don't just buy and hold. No, do you know what? I think some of the people, you've got to understand the kind of company here. You can't just buy and hold a company you haven't researched. I know. But if it's like, I don't know if you saw one of the worst performing stocks I've ever, is Omega Diagnostics. It was one of these hope hype potential stocks based on lateral flow tests. It went from, if you look at the chart, during the pandemic, it came out with it's going to be one of the ones. A couple of guys on Twitter hooked onto it, saying this is the next big one. Because Novocyte was one of the best performers in that area, and so in April the 9th, 2020, it was at 9 pence a share, right? And it went up to 120 a share in October, about October that year. Came back down to the 27th of November to 40 pence. So it went from 120 to 40 pence. A lot more hype around it, saying, contracts are coming from the NHS and all that from the Department of Health. So rallied again, back up to 120 then by February. And it slowly ground lower and lower and lower. Didn't land any contracts, I don't think, from the NHS. All the metrics, the losses, half-year results came out a while back. And the losses gone by tenfold. They've grown their revenue by 80%, but they paid for that via marketing and investment, and so their losses gone from £250,000 to close to £3 million. So the losses are now. That's not a lie. If you look at that statement, that company is not improving, regardless of what you hope you have in that company. And there was a lot of people just hope. You can't invest on hope. That's a dangerous thing to do. If you do invest on hope, you've got to get in very early when they're like a sub 10 million market cap. If you are investing in a company that's 100 million market cap and it's got very little revenue and it's valued 150 million, you've missed the boat, absolutely. And if lots of people on Twitter are bullish on it and 150 million saying, contract's going to come, that's not an investment thesis. That's just hope, isn't it? Yeah. You can't just rely.
And today that's down to, below 6p.
It's now...
market cap of 10.7.
Yeah, it's now actually gone from £1.20 to 5.8 pence, yeah. And a lot of people sadly being burnt in that. I saw one guy today saying that he's put all his savings in that. So first and foremost, if you're going to invest in a company you think is the next big thing, you've got to invest very early on when low market cap, and secondly, don't put all your money into it, because if you're basing it on hype alone and hope alone, that's not an investment thesis, you know.
No.
Have you watched? Did you watch Dragon's Den?
Not for a while, not for many years, but yeah, I have seen it previously.
The new guy's in it, Stephen Bartlett. He's only 28. He's got a social media business worth about 300 million quid. But he's good, and he came from like being skint in Manchester, really absolutely skint, not affording money, and he's done so well. And he's on the ball, and you realise what Dragon's Den need are more young people, entrepreneurs, you know. And the rest of them are a bit of fuddy-duddies now. I just think, and Tuka, for example. Tuka needs to get off there. He could be there for ages, isn't he? But it's good. But and you see a lot of people coming into Dragon's Den, pitching their businesses, and they all say, "No, I believe this will be the next big thing. I believe this." I said, "Of course you would. So you put all your money into it, you know, but you've got no revenue proving that." And yet, that's the same with investors in small cap companies, where it's risen so much. And they say, "No, I believe this is going to be huge." Yeah, but you believe that, but that's blind faith. You know, it's like any belief. It's like religion. You can't prove it to a certain extent, but you believe it's going to happen. Now, that's okay with religion because you're not investing money into it. But with a business, you can't just invest in it because I believe this is I really do. That's just hope. It's not going to work out, is it?
No, absolutely. I mean, there are then just some fundamentals that we all know of investing in terms of spreading the risk and diversifying a little bit and all of that, not putting all your eggs in one basket and all that stuff can help mitigate the potential. Yeah, absolutely. I
put a chunk in a hope high potential stock because you can do very well on them. I've done well on a few of those, but I now prefer sustainable long-term rises based on fundamentals. And by fundamentals, I mean revenue, profits, and all that stuff. Yeah. But in fact, on Dragon's Den, very interesting. An escape room guys came in.
Okay.
Yeah, and Stephen Bartlett was very down on it, so I don't want to invest in an escape room. It's been done. It's all and these guys started like 2 years ago. And they went very well. They got one escape room. They believe they're going to be the next big franchise and all this. They believe that as well, and the revenue is fine. But I was very interested. In fact, it did get investment, I think, from 2 dragons. But they want to start a franchise, And they said, well, until they're not making profit at all, they only just started like 2 years ago. And it's very interesting because. And Stephen Bartlett is very big on Instagram. He's got loads of followers there. He's very social media influencer. And he said, well, you can't Instagram that kind of stuff, And it's very interesting because in Boom Battle Bar is very Instagrammable. But escape rooms can't. You can't Instagram it because obviously there's all secrets there. But the thing is, this is what happens, see, when a new leisure sector becomes very popular, and it has with escape rooms, a lot of businesses jump into it, of course, because money can be made. And then businesses are starting out now, I think, or have done so in the last 2 years, probably not survive in the escape room business. It'll be, and in fact, if you look at the first broker note about 2 years ago, I read about escape rooms. They said there'd be consolidation in the sector, like there was in bowling, like 10, 15 years ago. There's only room for a few big operators, and I think escape room will be one of those because now they're starting to make a profit. They are listed, so have access to capital. They have one of the biggest operations as well. Plus they're going to have Boom Battle Bars as well, which is also Instagrammable. It's all growing. So it's funny, isn't it? You realise. It'll be the start of the end for a lot of businesses who start out in the last year or so for escape rooms because you're not big enough now. You'll be if you're good, if you're a good small independent operator, you'll probably be taken out and bought out. But if you're average, you just you won't work. You'll fail.
Yeah. Yes.
I don't know if you saw what happened with this XP factory on Friday. Someone sold. It wasn't a huge share, 13 grand someone sold, but it took the share price down, which is annoying. The last few hours.
So knocked, didn't it?
Is that all it takes, 13 grand for it to shoot down?
Yeah, I think someone just put it through in one chunk of that, and I think so. I think that's all I saw. Last, 13 grand, and it went down, so it was really annoying. I thought, well, bloody hell. The thing is, it'll bounce. Sometimes it'll just bounce on the Monday because that's out the way. But also on a day when everything's going down. There's lack of liquidity in the markets. That's what it's about, liquidity, isn't it? And market makers will just mark it down anyway and say, I don't want to take that on because there's too much bearishness in the market. And they rip the market off. No, but if you look at it, right, if you look at the revenue, right, Escape Room now is valued at 40 million. They've got about 10 million in cash. So that's 13 million enterprise value, no debt, pretty much. Their trading update, H2, like I said, this was on only escape rooms, owner-operated, nothing else, no franchises, no boom battle bars, no remote play, no virtual play, that. So they did 5.1 million revenue for the second half. This is with a very weak December. I don't know if you saw the ONS stats out saying December took a big knock in leisure hospitality because of the COVID restrictions.
Omicron.
Yeah. So even if they replicate this, right, for H1, H2 this year, that'll be 10 million just on escape and owner operated, not franchises or anything like that. Plus added more sites as well. They've added more sites. Add to this franchises, remote play, at home play, all that stuff, and plus a strong December. Hopefully that'll happen. Even just escape rooms will be doing 12 million alone. Now, it took me an EV of 30 million. Then add that to boom battle bars, which will double that again, pretty much. You're talking about 24, 25 million in revenue, which is literally less than, one and a half times sales.
Yeah.
Now, if you think about that for like a fast-growing market leader, profitable, experiential leisure business, and this is just a start. We're nowhere near rolling out all the boom battle bars. This is cheap now. Do your valuations on it. It's cheap.
Yeah.
Cheap. Gotta buy it when it's cheap. That's it.
Yeah. No, I think we know you're a fan. Yeah. No, I agree. Yeah. I'm pretty happy with all my portfolio. It's always frustrating to see things grind lower and for a long period like we're going through now. But you I'm happy with the companies. You've just got to, wait it out. You've got to be patient, haven't you? So
Yeah.
I
want Trufin to come out. I'm sure we're not far away from some Trufin news. I do see on their LinkedIn page they are expanding Satago. They said they're going through an exciting growth phase.
Oh, I didn't see that. Okay.
Yeah,
cool.
and they're recruiting. I wonder why.
Yeah.
That's going to happen, that is. That's going to happen. And they said that other things are happening as well in the background. I don't know when it's going to happen, but it's going to happen.
Yeah.
It'll be one of those fast-growing... in fact, I saw a guy, I got an alert on that this morning. A guy, 3 tech companies to look at. It was like Visa, PayPal, and Trufin. I don't know, this blogger. I
Really?
Thought, what, really? Yeah.
Okay.
So that's very
Cool.
interesting. What other stocks are there? It's been Biome's taking a knock as well.
Yeah, I was going to say Biome's taking a knock, isn't it? It's a frustrating one, but GFIN is up and down like the proverbial. Yeah, that's it.
Apparently, trading update should be out soon on that. And
For GFIN.
Yeah. So the thing is, right, I think the brokers now, I mean, after Polarian, you always got to live and learn, After Polarian brokers had 90% chance of FDA approval, you realise never take what the brokers thing as read, because you got to do your with Gfinity now. They're I'm not saying they're wrong. They're brokers, but they've got 78% revenue growth in for this year. So that's going from 5.6 to 9.4 million. Now I'm happy with like in excess of 20%, but I'd like to see about 35%, maybe 30-40% for that. So I'm going to halve that and say I'll be happy if they do 40% this year easily. And so for the trading update for H1 in 2022, I'll be happy with 3.6 or 3.7 million to get to say double that for the year, because that's still good growth, especially if the margins are the same or better. But sometimes people get carried away. But I don't know. Yeah, I don't know. It's a frustrating share, but we're on about 5 times last year's sales. So that's around about peers group valuation, so it's not expensive. But there we are. Yeah, it's frustrating and annoying.
Yeah.
I've also bought another share, which next time we talk, I'll probably talk about.
Oh, okay.
I mentioned it on my webinar on the Share Pickers Investment Club. By the way, that's opening up this week. Open up for 1 month only. It's open up for free. So if you're listening to this or you join up in the club, 1 month only for new members. And then
what about renewals?
Yeah, renewals. Yes, they can renew, of course. But there's a cap on numbers.
Oh.
Where's a cap on numbers? I don't mean, physical.
Branded cap.
I mean the amount of people let in. I don't mean seeing the physical numbers with little hats on.
Right. Okay.
That makes
no,
sense.
that's... Steve's a bit gutted. He was hoping you'd get one through the post.
I've got one, Pete.
Yeah, that'd be
Share
odd.
pickers.
Yeah, what you
I got the badge, the stick, the cap, the t-shirt, everything. So
maybe we should get some merch.
Yeah, I think it's time.
There's guys on. It's my kids watch YouTube and all that. More TikTok now, but there's guys like TikTok. They sell merch. I think who's buying merch of these? And you realise they got.
No.
We're not quite the same as TikTok, though, are we?
No. But there's people buy merchandise from these guys. They're doing the most rubbish, stupid things on TikTok, and they're selling merch. Who's buying this? And Fred and Monty look at me like, why shouldn't people buy that?
So what merch we go for? Share pickers. How about a pair of Speedos?
Yes.
Yeah.
I think we should do a cap, which is basically the same as your bald head.
That's nice.
That's nice.
That's nice. Well, or a swimming cap. There's with the Speedos. Yeah, perfect.
Yeah. That's nice. That. Can you source that, Steve? From somewhere?
Yeah. I'll sort that out.
Head of merch, Steve.
Yeah. That'd be something to do with shares as well, though, wouldn't it? Just not just.
Oh, okay. Calculator.
Creative. so a swimming cap with a bald hat colour, a skin colour, with a calculator on it.
Yeah.
And Pete used to work in a creative department.
Yeah, and that's why I don't anymore. Yeah.
Maybe a T-shirt with the shares I own, target prices on them. It'd be quite nice if you're walking around, XPF £1 by December, things like that. That'd be good. That. Yeah.
Yeah.
Get one with like a little sewn in little screen or something, and you have your live updates to your shares in a T-shirt. Yeah.
You can get those. Can you get those now? I'm sure I saw someone on Dragon's Den do that years ago.
You can certainly get them. I've certainly seen them over Christmas with scrolling Christmas messages and stuff. So they're halfway there. Hey, that'd be good. Yeah, like you're scrolling stocks on your
like
T-shirt.
A ticker.
Yeah, that'd be good. Just buy. Buy.
Your live portfolio on your T-shirt.
That'd be good.
Quite weird. Okay. Yeah. Well, let's try it.
Yeah.
What's the budget?
Yeah.
£1 million.
Gotta buy cheap, it's not expensive. It's gotta be very cheap quality. Very cheap.
Right.
No guarantee. If it falls apart after, all those glitches in the matrix there, whatever it is, then, you can't get your money back. No.
Yeah. That would be good. That's a good thing. And have that on your website. Extremely poor merchandise.
Extremely poor quality. Do not ask for your money back.
Really poor quality merchandise.
It is overpriced tat.
Guaranteed to last less than a month.
Yeah. Just entitle it Overpriced Tat.
Yeah.
That's what it is.
That's it. There we go.
So people come back, what are you expecting? It's on the website, Overpriced Tat. You bought it. It's not working. Come on. Heaven's sake, I got a quid from China. What do you expect? Well, I'm charging you 10 quid, but listen, that's what it is.
A complete waste of money.
Yeah. I see England, I mentioned that, England copying Wales' tactic last week in the Six Nations.
The Six Nations starts tomorrow, doesn't it? Let's be honest.
Does it?
Yeah.
I thought it was last week.
No, that was warm-up games.
Who are you playing tomorrow?
No, we're playing Sunday.
Oh, yeah.
We're playing Italy. We're playing the Guinea.
There we are. I should get a win in your belt there.
Yeah, exactly.
The thing is, I don't think Wales get a win in their belt. Scotland, I think Scotland are looking okay, aren't they?
Well, Scotland look pretty good. So,
are
England,
they though?
England threw it away a little bit. Let's be honest.
I got to say, I didn't actually see it. I don't know where it was. I was out somewhere, I think, but I didn't actually see it. So,
well, there's a penalty try to Scotland that swung it, but Scotland were playing well, so I'm not going to say it was completely down to that. But we didn't help ourselves. But unfortunate start. It's always annoying to lose the first game because that means your Grand Slam aspirations are gone. You can't win the Grand Slam now. But anyway, I think Wales might very well struggle against Scotland.
Yeah, I think they may struggle against Italy. First. They were aimless against Ireland, even when they had the ball. They didn't seem to know what you say. Saying, guys, come on, you must know where the try line is. Isn't that taught at the basic level there? Just run that way.
I think so.
Try not to drop the ball when it's past you. Just hold it in your hands. Right? Or, it just didn't seem like they know. It's funny that you get a team, international standards. They play sometimes. You think, what's going on here? They just seem like they've just started playing. Even the basics failed them. So it's very odd. But there we are. Anything worth, Steve? Anything worth watching on TV? Be watching or listening to? Or anything like that? I tell you, what I found. I listened to Joe Rogan. The best publicity ever. The best publicity ever, wasn't it? For him. I mean, because everyone's checking him out now. So, who's this guy, Joe Rogan? I bet now he had 11 million listeners per episode. Or something. I bet that's almost doubled because you couldn't get better publicity than that. But I find him a bit boring.
I haven't listened to any of them ever.
He's not a fan of our podcast either, to be honest.
Well, he should be. It's better than his.
Yeah.
But I think he's got the stage now. He's so relaxed. He just starts chatting. There seems no drive or motivation there, you know. It's,
Right.
But someone said to me, his demographic is truckers. So they just put it on and listen for hours, you know, because they're driving for hours on end around America and Canada. But, yeah, I've never been into it. Steve, any recommendations?
Well, as you know, this week I watched The Tinder Swindler. That's a good watch.
I've heard about that. What do you mean, as you know? I didn't know about that. What do you mean, as you know?
I sent it in the group, didn't I? I said Tinder Swindler.
Yes, you did.
Worth a watch.
Right. Okay.
Oh, okay. Yeah.
That's definitely. It's only a one pass as well, like 2 hours, like watching a film. So yeah, that's definitely. Give that a go.
Yeah, I know. I thanks for reminding me. 'Cause I saw it yesterday a couple of times mentioned, and people on Twitter say, "I can't believe this guy. Is he just asking women for money or something? Really?"
Yeah, he basically scams women out of money from meeting them on Tinder. But it's the story, kind of the scam's quite interesting when you can see how it's all put together.
Where is he now?
Steve's taking notes there.
Yeah.
What's that?
Where is he now?
Well, that spoils the ending, didn't it?
Oh, okay.
Okay, good point.
So is he still doing it or not? Oh, in fact, that probably spoils it.
That's supposed to
yeah, I'm not going to say anything. Just watch it. But another thing I started watching last night, which seemed really boring. I only watched it because it had Kirsten Bell in it, with the longest title ever in the world: "The Woman in the House Across the Street from the Girl in the Window."
Oh, okay.
Right. Okay.
Well,
Good.
Starts off really boring, but it's starting to get a bit good now.
Is that on Netflix?
It's on Netflix, yeah. But the first episode and a half is just like it just doesn't go anywhere.
Right. Okay.
Okay. All right. What about you, Peter?
I've eventually watched pretty much all of Ted Lasso now. I know everyone was raving about it. I never got into it, but I have now got into it. It is quite good.
Yeah.
It's a bit
do you know
weird.
what?
But
We've gone to oddly.
Yeah.
I don't know if we finished that or not. But yeah, we're into it. But we're watching the Ozarks again, so we can get back at the start again. So, because the thing is, you know what? It's nuts. You watch the Ozarks again. It's not called the Ozarks. It's called Ozark, isn't it?
Ozark,
watch that again. It's amazing how much I've forgotten. I'm thinking, I didn't make him watch. So who's that guy then? I thought I knew this back to front. It's amazing. I think maybe I got dementia, but I may just watch it again and again. But
okay.
It is good though. That's what
okay. I watched the first season. I didn't really watch beyond that, but yeah.
All right,
Okay. All right, excellent.
Anything else?
Paddy turning up? No.
Okay, yeah. Paddy said, call at 5:45. We were starting at 6. So I should be there.
Right.
It's 6:45 now.
Yeah. No sign.
I don't think he's coming.
I've got a feeling he's not coming.
No.
Okay.
All right, well, Steve may even see you tomorrow, fella, in Cardiff, you know.
Come and see me doing my live outside broadcast in a bar.
Oh, is it outside? Outside?
It's inside, but it's outside, you know.
Outside broadcast, okay, because it's the coldest day of the year tomorrow.
No, it's inside but outside.
It'll be Jingle Ball. All right.
Wonderful.
Lovely. Good boy.
Right, enjoy.
Bye.
Cheers.
Boop.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.